Steve at Momentum Mortgages. Steve is my go-to guy for all things mortgages. He keeps me ahead of the game. It's important for me as an estate agent to know what's going on with the market. I think this week is a brilliant time to come and have a chat with Steve, especially with what's happened with the base rates and the rises recently. We do know there's a little bit of anxiety out there in relation to this, so it'd be good to hear from Steve. He's at the forefront of the industry. So Steve, good to see you.
Good morning, John.
Yeah, no worries. So Steve kind of covers the Tunbridge Wells and surrounding areas. Steve, you must have had a busy week. Has the phone's been ringing?
It has been absolutely frantic, John. There's been a lot of people that have been worried, and we've just been trying to calm people down and just make them more aware of what is actually going on.
Yeah.
The media is putting a lot of content out there about lenders pulling rates, pulling mortgage offers.
Yeah.
And some of it is a little bit sensationalised.
Yeah. And within my industry, obviously, there's other fellow agents who've had quite a busy week as well with buyers and queries and inquiries that have come into it. Things will calm down over the next few weeks, I'm sure. It's understandable why some lenders pulled rates given kind of what was happening so quickly, right?
Absolutely, yeah. They had to do it. There was talk of the Bank of England raising rates faster than previously anticipated in reaction to the mini budget that got released out by the Chancellor the week prior, and that meant that swap rates went up considerably, which is the wholesale market, what a lot of the lenders will lend their money off of, and that meant that has a direct impact on the fixed rates that they can offer. Yeah. So where lenders were in a position where they felt they had to withdraw from the market, take a little bit of a breather, just see where things were going, and then come back into the market near the end of the week to early next week and just reprice things. That's really all that's happened, and that actually happens quite a lot in the mortgage market.
Sure.
It just doesn't happen normally as quickly and as widespread as what has happened for this week.
Exactly. So some of the news within that came out obviously from the mini budget was obviously stamp duty cuts as well.
Yeah.
And first time buyers, rightly so, have come out well from that, and there is some extra savings for them, which I think is great. So if you're a first time buyer at the moment and you're looking to come into the market, what kind of rates are available?
Yeah, I mean, I think there's been a lot of flack given about this mini budget, but I think the one good thing that did come out of it was the stamp duty increase to the thresholds, because the last stamp duty revision was back in 2003. Of course, house prices have gone up a lot since then.
Yeah, they have.
So I do think that was a welcome introduction, especially the increase in the threshold for first-time buyers. That has saved them a hell of a lot of money when you consider someone who's a first-time buyer looking in the southeast. They're looking at properties at between 300,000 and 400,000, and now they know that they're not going to have to pay any stamp duty. That's absolutely fantastic. There's plenty of first-time buyer mortgages that are out there. There's still 5% deposit mortgages as well. They are still available. A lot of the main big lenders are still lending. Things are very busy at the moment, but 95% mortgages are still within sort of 4.5% to 5% at the moment. So, and actually when COVID first came out, and 95% mortgages got completely pulled from the market, and they actually didn't come back for another year.
Yeah.
And when they first came back in, when the government brought in their mortgage guarantee scheme, lenders were coming in around the sort of 4 to 4.5% rates as well. So
sure.
Actually 95% mortgages, they did go down in price, but now they're really just coming back up to what they were really about 1.5 to 2 years ago anyway.
Sure. So I guess one of the next questions that I'm quite interested in asking, because this kind of falls into my bracket, is if you're you already own a home, you've got lending, you've been on a fantastic rate for the last few years. Yes, we all know that it's going to be going up, but what's the best thing to do if your rates come into an end in sort of like 12 to 18 months? I think some people are thinking, am I best as taking a penalty and switching onto a new rate, or do I just sit tight and see if things are going to kind of calm down a little bit more? I guess none of us have got a crystal ball, so what do you think would be best?
Good question. I think anybody who is between 12 and 6 months of their rate expiring, go and speak to a broker. they will work out whether or not it's best for you to remortgage now and possibly incur an early repayment charge, because most mortgage offers will only last for a maximum of 6 months. So by the time you actually apply, lock in the rate and get the offer out, you've got maybe at most 7 months. If you've then got another 3-4 months left to go on your mortgage until it expires, then of course, if you're going to take that rate that you got, you're going to incur an early repayment charge.
Sure.
For some, that might be the right thing to do. If rates are going to go where they're anticipated to go in the middle of next year, then it may be that it works out better in the long run to actually take that penalty.
Yeah.
But and actually just as early as this morning, we were talking to a client. They had a mortgage of £240,000.
Sure.
Their rate doesn't expire until November of next year.
Yeah.
So what we told them to do was, we're going to look at a remortgage now, we're going to get that agreed, so we're going to lock in that rate, and then the mortgage offer lasts for 6 months. So we're going to wait, and we're just going to see where the market plays out.
Yeah.
And then when we get to within 6 months of their actual mortgage rate expiring, we're then going to relook at the market again.
Yeah.
And we're going to relook at and work out, is it best to then reapply with a new lender at the day's rates and not incur an early repayment charge?
Yeah.
Or is it better to take that rate that we had locked in right now and incur the early repayment charge?
Yeah.
So actually we're hedging our bets here.
Yeah.
And the main thing for us is we're just trying to do the best we possibly can for absolutely everybody.
Yeah, of
And
course.
if that involves a little bit of extra work, then fair enough.
Yeah.
If anyone's within 7 months of their rate expiring, then they need to be looking at doing something now.
Yeah.
Because the mortgage offer is going to last long enough. A lot of lenders are allowing product transfers now 6 months early rather than 3 months early. So there are a lot of options now for people that are within 6 months of their rate expiring.
Okay.
And I'm obviously, of course, no one's got a crystal ball,
No.
but I would be fairly certain that rates are still going to continue to rise.
Yeah.
So I think right now, doing something as early as you possibly can, that's a good thing to do, is get in touch with a broker.
I guess everybody's circumstances are individual. I'd certainly say, if you are watching this video, and perhaps if you are in that situation, it costs nothing to have a phone call with somebody and just to kind of hedge those bets. You know, not everybody is financially savvy and understands the market in and out. We're used to kind of dealing with people applying for mortgages or people kind of coming forward. Obviously I speak to you, so I kind of got a bit of an upshot of it, but yeah, definitely don't bury your head in the sand. It costs nothing to have a telephone call with somebody.
Not so.
And maybe just, you know, have a look at your own situation and kind of reassess it from there. But we are going through a period of change, you know, that's for sure. I think the good times of mortgage rates being that super low are definitely over.
I'd agree with you.
But we're just going to have to all adapt to it in our own different ways. We're not going to grind to a halt. The estate agency market's still going to carry on. People do have to move. What about, I guess my last question would be, Steve, overpayments. You know, if you can afford to do it, I guess that's something that you would advocate, yeah?
Yeah, I think it's probably something to consider, especially people who are maybe quite a way away from their rates expiring, and they're on much lower rates than what is currently available today. Making overpayments seems like a good plan. Seems like a good idea.
Yeah.
Let me give you an example. Let's say we've got someone who's got a mortgage. They've got a 5-year fixed rate. They've done it at the right time.
Yeah.
They've done it a year ago.
They've got 2% or less than 2%. Yeah.
They've got 0.99%.
Yeah.
And that's bringing them a very low monthly repayment. Thing is, 4 years hence, rates aren't going to be that way. So naturally, that is going to mean an increase in their payments.
Yeah.
So why not, if the circumstances are right, if you're able to, maybe start trying to make a regular overpayment.
Yeah.
1, because it gets you used to paying more per month.
Yeah.
2, the interest rates are generally calculated every day or every month. So when you make an overpayment, it usually gives you the immediate benefit of that. So you're just reducing your overall mortgage term when you make overpayments.
Yeah.
So when you do come to remortgage, you would have paid less interest overall, and you'll have less mortgage balance when you do come to remortgage, which will only help you going forward. So I would say it's a good idea, but if, as long as it's affordable.
It's everyone's individual circumstances, especially at the moment. We do appreciate that, but if you can, then yes, it's a good thing to advocate if you can afford to do that.
Absolutely.
Look, Steve, thanks so much for today. That's really useful. I hope everybody watching's got something out of that too. I certainly have. But like I say, if you've got any queries, look Steve up. He's a good guy. He knows what he's talking about. And I look forward to catching you up on the next session. Yeah, brilliant.